Radio Plus app, free for iPhone and Android devices.
Are all the recent equity market troubles blowing over or not? Mark Faber is publisher of the Gloom, Boom, and Doom report. He's on the line with us from Thailand this morning. Mark, let me ask you, does the great weather and beautiful view over there make you more optimistic about the markets?
Well, I'm optimistic for tonight. I think the market can rebound here. We are moderately oversold on a short-term basis, so we may climb to around 1800, possibly even 1820. But I think it will be very difficult for the market to make new highs. And let me explain you why. We have a lot of stocks in the U.S. that are far more down than the market is down. The market from the peak, 1850 on the S&P, went down something like 7% to its recent low. But stocks like Citigroup, General Motors is down 16%. Ford is down 19%. Lululemon is down more than 20%. Amazon down 16%. Apple never really made a new high after the high in September 2012. Then Ralph Lauren is down 20%, and so forth and so on. And we have here and there, like in 3D systems, big breaks, which would indicate that the market is very toppy.
That sounds more like doom than boom.
Yes, I think we had a huge bull market. In March of this year, it will be 5 years old. What do you expect? Do you expect the market to go up every year 30% when revenue growth is anemic and when the global economy is actually slowing down, because most of the growth in the global economy came from emerging economies?
Okay, let's pause it right there. So, Mark Faber says stocks are modestly oversold. All right. Hello and welcome in from Sunnyvale, California. I'm Mark Vierra. This is my weekly trading log video. I have a trading log that I put out here, HotStockMarket.com, every Sunday, and this video is sort of complimentary to that. Just basic analysis. I'm going to go through some trend lines, candlestick analysis, some moving averages, chart patterns, and then we'll get into volume. Very important. So first chart. Now I always like to start with the, I always like to go further out in the long-term charts, and then I'll start moving into the near-term charts. And one of the reasons I do that is, as a trader, I want to, if I'm going to be left with a bias, I want it to be more. The last chart I want to look at is an intraday chart. In any case, let's take a look at, this is a wide lens view of the SP500 monthly candles, and have this trend line drawn in here. And I think the next chart, actually, I just, let's close this, let's open up this one here. I'll give us, where I'm zoomed in a little bit, I drew in a flag, not much of a flag, but in any case, I'm looking at this candle. I think it's a kind of a hammer candle. The psychology of a hammer is a long lower wick taking out stops. When we get into the weekly chart next, that really comes together. And why do they do that? Well, let's take a look. Let's just pause this. I know I'm jumping around here, but this is where I'm keeping track of percentages. You know, we're 0.81% for the week. We got as low as 1737. So it's 1737. 92. Just plug that number in here, and that tells me we did a 6% correction. That's the modus operandi of the stock market, and I think the reason is, and it's fairly obvious, is you don't want to put too much of a pullback in there to leave opportunities. So you want to keep them wanting. and I think this is the main reason. In any case, let's take a wide lens view of the weekly just to show you where my trend lines that I'm drawing, and then we'll zoom in here. And this is a weekly candle. Look at that, this wick just went down and got everyone all excited, and it popped right back up into these trading ranges. You know, we broke down below this pivot. This was that broadening pattern that I pointed out. We took that out and went out to met targets actually on that daily broadening pattern. I'll show you that here in a minute. So this candle here is engulfing this previous candle. All right, that's bullish. All right, I think the charts are bullish this week, and when we get into volume, I've got some composite volume profiles that really bring it home. What else can I show you on this chart? You know, we just popped right back into the previous trading range, and that's what I think that's all I can really show you on the weekly chart. What did I miss here on the monthly? There was kind of this pivot that I drew on the monthly chart. I know, I'm sorry, I'm bouncing back and forth, but between these lows, and I pointed this out in the previous video, if we keep this continuing up, we get a pivot price oscillating above and below, and that's sort of a bullish bearish indication, and now we're just poking up above that. So, alright, let's get back to the weekly. What else do we have on the weekly here? This is basic trend channel. Alright, and we've got some pretty good touches down here. Oops. Now, if I just emphasize this, you know, one bearish thing I can mention about this support line is we've got more touches on the support than we do on the resistance. So, you know, the rule is the more something smacks you to support resistance, the more likelihood that it's going to break that. So that's, otherwise, you know, I pointed out the engulfing. We broke out of the channel and we're right back into it. So that is a bullish indication. Ichi candle. This just is really growing more and more fond of this script that Ichiban wrote, and you know, I've provided links to this Thinkorswim in the HotStockMarket section, group section. Arrows drawn down here. Let me get myself way out. Where price is getting oversold, and he's got these red colors that are indicating, you know, if you're contrarian, this is where buying opportunities have presented itself. Okay. And I think we're seeing the same thing down here. You know, crazy lines I'm drawing. But that's Ichi candle. I think it's a pretty cool little script that he wrote there. Let's see, weekly round bottom. We got our targets on this. We got down to the 1748. So, you know, that's a round top. Round top chart pattern on the weekly that we met targets. Daily trend lines, just take a quick look. This is where my trend lines are drawn, and we'll zoom in and take a look at, alright, these are the same lines drawn. And I'm marking out a range here, and this is sort of a loose pivot. You know, I wouldn't call, you know, say this is too dramatic of a pivot line, but I do see price reaction from this line, and between the center pivot line that I've drawn, I got what I'm considering a trading range out of that, and that's weekly or daily chart. So this is a near term, you know, intermediate to near term, we'll say. All right, what else? This is a 3-year. From this to this is a 3-year range. This is a regression channel, and we had some price reaction off of the medium point in the regression channel. Just throw that in there real quick. Here's a good one. These are our near-term moving averages. I like to look at moving averages to see how price reaction in previous moving averages. And what I'm marking down here is below the 100-day moving average. When you have these, oh, this is the wrong chart. I wanted to, I have these numbered wrong. Okay. This is the 5, 9, and 20-day moving average. And what I've marked these ovals here, okay, because when you have separation, all right, which we see the separation going on, all right, and when prices got to the bottom of the Bollinger Band, you have separation, and just as this 5-day moving average starts curling up, let's see if I can zoom in a little more. When the 5-day has curled up after this separation, previously, this is what's happened. You have separation, 5-day moving averages curling up, and this is what happened. And we can go all the way through each one, but this is what we're seeing is a separation between our near-term moving averages, and we got the 5 and both the 9-day curling up. So just looking at moving averages here to see what has happened previously, and then if let's go back into the chart I just had open. This is the 20, 50, and 100-day, 120, and the 200-day moving average. And here I'm looking at the 20-day cross below the 50-day. That's bearish, is it? Well, previously when we have smacked below the 100-day moving average and the 20-day cross below the 50-day, that was actually bullish. All right. Same thing happened here. Price got down to below the 100-day moving average. All right. And our 20 crossed below the 50, and well, that's what happened. So moving averages are really no big deal. Just they're interesting to look at. Let's see, what do I have? A daily FIB extension here. This is going back to this previous low. This is our high that we put in, and the down pullback, and that's where I'm starting the FIB extension. And I always like to say that this 50%, which comes in 1840, 50% is always one of the key levels that I'm looking at when I'm looking at Fibonacci's. So just putting that out there to keep in mind. Now let's get into some chart patterns, show some candlestick analysis and a little psychology behind that. What the main thing I'm looking at here, well, let's see, we need to go back here. We had a rounding top formation. Okay, we drew measurements on that. We had this broadening right angle descending pattern. And we're going to keep our eye on this previous trend line because this is going to be a good pivot, where we might actually find some support. And that's sort of what I'm expecting this week is some consolidation. I'm kind of expecting some consolidation, maybe draw another bull flag before continuing up. And of course, I can see already we're going to have people calling this a head and shoulder pattern. You can have a complex head and shoulder with multiple shoulders, but this is really a really messy looking head. I'm not so sure about that as a head and shoulder, but that's my prediction. I think we'll see a little consolidated bull flag in sort of the same range as the previous bear flag that we had here before moving upward. Now, the other thing I want to point out here too is I heard people calling this a bear flag, and when you have a flag tilt that is in the direction of price, that's not a bear flag. Okay, and the next chart will really illustrate that. I got here, with the same trend lines, you can see, not always, but in this case, that downsloping flag marked out textbook, just really pretty looking inverted head and shoulder. And of course we went off to meet targets on that pattern. And you know, a lot of people, they don't believe in chart patterns. And you know, let's go back to this chart here. There's psychology behind this. You know, this is a typical Wyckoff accumulation, and it's a reversal pattern. And when you look at volume and it puts it more into context, and you start actually understanding that these patterns do have meaning. Let's look at the broadening pattern here. We had our downside targets met on this pattern. Let's see, here we go. Downside targets were met, and we broke above this. This is what I'm going to call a key pivot line here too. I'm going to keep my eye on this trend line because I do think we'll see a reaction. But these are all predictions of mine. Like I like to say in these videos, I'm making no buy or sell recommendations. This is just for informational purposes only. This is, you know, what I'm looking at. And now let's get right into volume. Last video I was bullish on the market. I saw, let's see, last week I saw this as demand kicking in, stopping volume, and I pointed out that stopping volume is no guarantee that price is going to reverse, but it shows a speed of the market, price is slowing down. Alright, and this week now I'm looking at the size of volume here. Okay, this is volume by time, and looking at that as a climax. Okay, I think we are seeing climax volume here, and this amount of volume is above average. It's nothing to sneeze at. I think that is some demand showing itself here. Of course, I'm also looking at, these were previous high volume node pivots. They're growing a bit. This is another one right here, pretty shallow. This is volume by price. So reaction of volume by price is telling us of the elasticity of the market and pointing out clues there. I also think that this is going to be an important pivot line right here that actually is going to coincide with this high volume resistance. So I think we're going to find resistance in there. I think we might poke up a little bit more, but like I said, I think we're going to consolidate a bit. I am thinking, you know, bull flag before price is going to want to go on to see anything higher. Higher RSI low with price making lower lows, so we do have a little bit, you know, last week I said that there was slight bullish divergence going on. Now we're seeing it's coming in for a little more confirmation to that. You know, this is stuff that I wrote last week. High volume institutional sell climates consolidation. Yeah, so price did find a foothold. I think that is what we're seeing. I think that's what volume is telling us right there. So, quick look at near term. This is an hourly. Just looking at, you know, prices moving up, and I'm seeing increase on that push upwards. So that's telling me there's somewhat of some conviction in there. Now, I want to look at some market profile. These are monthly composites here, and what I'm seeing here is if we look at this previous, this is a bell curve. All right, you know, you can call this a B, and I think we're going to be building a P here. Okay, I think we're going to see volume picking up. Of course, this is where our price is right now. this line indicates the initial balance. So that's the initial stages of trading. We get an initial balance. Our time price opportunity is down here, and typically that's where I've been seeing prices at the opposite side of these TPOs. And this is a 3-month point of control right there where prices building up at this previous high volume. So I would expect that volume to pick up and form one of these bell curves, and that's sort of why I'm leaning towards a consolidation of price. We might move up a little bit, get some late to the party buyers, and then I would expect a little bit of consolidation. And last volume market profile here. Now this is a weekly composite, and on the weekly composite I'm going to expect to see a B. Here's our lower B, and this bell curve formed down here at this volume node. I'm expecting that we're going to see volume draw a similar bell curve just like this one here, and then we'll look at that and decide from there where price is heading, if it's going to head above or below. I think it's going to, like I said, I think it's going to consolidate a little bit below our point of control, and then move upward. And let's look at U.S. Treasuries. U.S. Treasuries were painting a picture last week. We saw a buying climax up here. This high volume confirms a buying climax, and of course price even further confirms it on the move lower, where supply has entered U.S. Treasuries, and that happened the day before the Thursday and Friday big move. So that's painting a pretty clear picture of the movement of liquidity there. Not always, but and also this is a weekly chart of 30-year yield, and as I always like to point out, the further down this goes, the more attractive stocks look. Now it's telling me the bottom here, it's finding support, so I think the yield has plenty of room to run, okay, before the sentiment changes. U.S. dollar. Now, I'm not bullish or bearish on the U.S. dollar. I am bullish in the respect that I think it has proven to be just stable over the years. Just really surprises me how stable U.S. dollar has been. But we still have this rising channel. I think we might see some action here. I don't see any reason why it's going to move out of that channel. Dollar is just a stable animal, and we see the opposite picture on the euro. I do expect more downside in the euro. I think we'll probably respect this trend line. Of course, now I would love for the euro to get up in here. That would be a great opportunity for me. I was doing pretty good in Forex, and I got a little cocky here with I was long pounds, and I took a little hit right there. So I'm stepping back from Forex. I want to see a good opportunity to get back into that. So far, nothing really. This is just a mirror image of the U.S. dollar. What else do I have here? I think that's about it. So, in these videos, I always try to, give you a direction where I think, and I could be completely wrong, but at least I want to, give you some kind of indication of what am I looking for here? Here we go. So just to wrap up this video, of course I always mention HotStockMarket.com. This is me, Vierra. This is where you can find my trading log. And if you want to know more about what I'm trading, this video isn't about, recommending stocks or anything. But you can check out my trading log if you want to see what I'm doing now. At the bottom of these logs, you'll find I have links. These can be like the Thinkorswim trading platform. It's free. I'm all about free. Just trying to help you find information And another great place here to find information is Reddit. You know, there's questions being asked, and if you have questions, this is a good place to find some answers. This is subreddit StockMarket. All right. So that's all I got for a video this week, and hope to find you on the boards.